Welcome to another episode with Loans Elevated. My name is Broch Lassig, top 1% loan officer nationwide.
And I'm TJ Heidenreich. Together we bring the latest news, strategies, and insights in the mortgage and real estate industry.
All right, and we're back. We're continuing this series that we've had the past couple weeks. Last week we spoke about ROI and maximizing your wealth potential. So this week we're going to dive into where we've been, where we are, and where we're headed, kind of the state of the market. So let's take a step back. We're in 2020-21. The market, and every market, I should preface, every market has its unique advantages and disadvantages. So 2020 and 21, it brought the advantages of low rates. Disadvantage was inventory. There was extremely low inventory, and you saw offers being put out on homes with, every home that was listed had 5, 10, 15 offers, and the house was going under contract at well above appraised value. And it was hard for any buyers to get under contract, especially the first-time home buyers that did not have cash on hand to pay above that appraised value. Because at the end of the day, the lender and the bank, they're only going to give money for what the house is actually worth. Fast forward into just the past year, I guess 2022, what we saw was rates get hiked fast and at a really rapid rate, one of the most rapid rates we'd ever seen. And it put a shock on the market. We saw inventory start to go up a little bit, and that brought mega opportunity for home buyers. We saw, honestly, you could walk in with and get really good negotiating power. You could negotiate with the sellers to give you back 3 to 6% of the purchase price or the loan amount to go towards concessions, either a rate buy down or paying your closing costs to make it more affordable. Fast forward into today, we are running back into the same issues that we saw back in 21 and 20. Reason being is because during 22, the builders got scared. A lot of builders got scared. They didn't know what was going to happen with the market. Like us, no one has a crystal ball, and they cut building. They stopped building at the rate that they were, and so now we're running into that same inventory crisis that we had before. Already, yes, rates are still a little bit elevated now, but we're already starting to see that we're getting back into that multiple offer situation. Now, rates aren't going to be high forever. There's going to be time that you can refinance to obtain a lower rate. But right now, we're running back into that same problem. So people are fearful of this bubble, and that bubble popped. Rates. We saw house prices peak in August of 22. They came down a tiny bit, but we're already back up to what they were in August of 22. So the fear that you really should have is not fear of the bubble, but fear of the low inventory. So these numbers come from James Wood Kempsey Gardner, and he states that we're 31,000 units short in Utah as is. Now, that's not to mention net immigration. So there's going to be about 10,000 new households per year. And the way we came out with that is that there's going to be about 35K people coming into Utah. Now, the average household size we just said was 3.5. So it's going to be about 10,000 more households coming into Utah. Next is new household formations. So that's people coming of age to buy. So your average first-time home buyer is about 33 years old. And we're expecting about 19,000 people coming of age that are ready to buy a house that before did not own. And then third is rates coming down. Rates are expected to come down later this year. And this is nationwide, for every 1% that rates come down, that's 5 million more people that can afford to buy that could not buy before. So Utah's portion, that's about 50,000 more people that can afford to buy that could not afford to buy before. So what does this mean for you if you're looking to buy? It means you've got more competition, but it's a simple supply and demand. It's going to be really good for home appreciation. If you can get into the game, you can see really a good amount of home appreciation in a short amount of time. Now, it's not get rich quick, and I don't think it's going to be what we saw in 20 and 21, where we saw appreciation go up by 20, 25%. But I think we could see a really good amount of appreciation in a short period of time due to just the lack of supply that we have and the amount of people looking to buy. Next is there's a program called SB 240 that's being rolled out. It's a bill that passed, and even the government, this is how you know there's such a supply issue. Even the government recognizes that there is a supply issue, and they rolled out this bill called SB 240. And SB 240, what it is it's a grant for first-time home buyers that if you're looking to buy new construction, purchase price under $450,000, they'll give you up to $20,000 towards that purchase price. And that can go towards whatever you need it to, a rate buy down, closing costs, whatever you wish. Now, the caveat to this is it's not yours forever. When you refinance and or sell the house, you have to give that money back. But the good news is it's recyclable. This is going to be going on and on and on. That way for future home buyers or homeowners, they can use this grant as well. So I hope this helps. If you have questions about anything, kind of where we're at, where we're headed, please reach out to us. If you want a specific scenario ran for yourself, please contact us. We can do a cost-free consultation and see where you sit. And look out for next week, and we'll see you then.
Thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.